So hey, this is Kevin. Hope you're all doing well. Today is August 21st, 2015. We've had a number of difficult weeks in all the markets, not just stock markets, but all the markets recently. And so I wanted to just remind everybody the difference between an accumulator and somebody who's living off their money. I'm going to send this video to all accumulators. And if you're an accumulator, that means that you're a person who's continuing to buy and acquire investments. And somebody recently, reminded me of the old axiom that when stocks go down in price, people sell, and when stocks go down in price, people buy. And so if you're an accumulator and you have 10 years or more to continue investing, the prices of securities that are in the green here, this is the Dow Jones Industrial Average, the true blue chip companies in America. If today you're going to purchase companies, which companies do you want to be purchasing? Well, first of all, I don't recommend choosing individual stocks. I recommend buying indexes, because it's crazy sometimes that good companies can perform very poorly and bad companies can perform better. That's just the reality of the situation. When we look at the Dow Jones Industrial Average here, again, the blue chip companies, Goldman Sachs is up. IBM and 3M are both down for the year. And then you can see Boeing, Disney, United Group, Apple. Apple's only up 2% for the year. Home Depot, and then Nike, they're all in the green. Okay, so if you're buying these shares today, which, again, with indexes, we're going to buy all shares. I just want to make a point here. You'd rather buy shares at a lower price. Again, with the stocks versus the socks, you want to buy stocks when they're on sale. You want to buy stocks when they're on sale. But it seems a lot more enjoyable to buy things when you see the green. I'm going to make a video on loss aversion and the behavioral finance issue that we have when we see red and exactly what it does to us. But when we look down here and we look at some of these fantastic companies that are all in the red, Travelers Group is insurance company. J&J is down almost 6%. McDonald's is up. Bad Food is a good stock. United Technology. This is aerospace. And a defense technology player is down almost 20%. The two oil companies are down. Caterpillar is down. Procter & Gamble, which is as blue chip can get, is down 19% so far this year. American Express. Visa's up. Walmart's down 20%. JP Morgan, Merck, DuPont is down over 25% for the year. So what we're really seeing, Merck, I'm sorry, I'm on Verizon here. Verizon is barely even. Microsoft, Coca-Cola down. Pfizer is up very nicely, 11% this year. Intel, Cisco, and then GE are all in the red for the year. So every time that you look at the news, every time you hear about the stock market, all I would ask you to remember is that when there's red, you can smile when you're an accumulator. If you're retired, not so much. If you're retired, you want only green. I'll leave you with Charles Ellis's thought experiment that he used to give to all students when he was teaching, and he would say, would you prefer if the stock market would go down 50% and stay down for the next 20 years? Or would you prefer that the stock market goes up and stays up for the next 20 years? And obviously, what he's trying to remind the college students of is that if they get the opportunity to buy markets in the next 20 years when markets are down, they're going to do much better in their lifetime. So, I would just, again, finally, just recommend when you see red and you're an accumulator, just ignore the account balances and just keep on buying, because that's the best time to buy. Thanks so much for watching, and look forward to hearing from all of you soon.